Good morning, everyone. I'm Lex, your host. Welcome to Top Trading Thoughts, Options Group TV. Follow us on YouTube. Today, I've got my great guests, Jason DiLorenzo in the middle and Mark Phillips coming to us from Paris, France. Hello, gents. How are you today?
Good afternoon, Lex.
Why don't you ever say coming from you from Northern Virginia?
I can't say that. It's not cool enough. I mean, Paris,
okay.
France.
It's not as exotic.
You don't even have to take a COVID test to get in and out of West Virginia, for God's sakes.
Well, Lex, it looks like you didn't get the memo. It's Blue Shirt Tuesday.
Yeah, I know. I was about to say, look at this.
Do you know how deep I have to dig for a collared shirt with buttons on them? It's hard for me to find that. That's a deep dig. So
this is Lex dressed up compared to tacos and beer shirt last time.
That's right. Exactly. This is dressed up. I just came from Orange Theory, and I'm looking good. So we only have a little bit of time today. Let's hit into it right away. We're going to tackle a little bit about the crypto space. I'm going to push it over to Mark. A lot of volatility in the market over the last several days, right? Lots going on in the world. Crypto, I think, was halved in the last 5 or 6 trading sessions, something like that.
We're down over 50% from all-time highs here. So, some of those highs came back, in the middle of the fall. But, where we're trading right now, Bitcoin's, half of its all-time high in the 69,000s. Ethereum's about half of its high in the 4,800s. So a lot of volatility. Kind of coming into this January period, we're seeing some of those implied vols now. Implied vol in that space is low when it's trading in the 50s and 60s. But, that compared to trading as a triple digit vol, that we'd really seen some bottoming out. But just over the past 2 weeks, vol spiked back up. But I think the most interesting thing to talk about is how correlated these assets are over the past week or so to some of the broader global markets, U.S. equities in particular. Traditionally, the one of the main narratives around crypto is that it's an uncorrelated asset. It's an inflation hedge. It's, a great component of a diversified portfolio, a small potentially component of that diversified portfolio. But, over the last month, I was running some numbers a little bit earlier. Bitcoin's something like 91% correlated to the SPX, and Ethereum's 93% correlated.
Really?
Just over the past month. That there's been really, these things are moving in lockstep. And, to me, that's screaming this one big narrative in the market right now. It's, and we've touched on it before, it's inflation. We hear everyone talking about inflation. We hear everyone talking about the rate hikes, and, risk is off across the board. And crypto's not playing that kind of diversifying role that I think it's been touted as before.
Wow. Okay. Mark, I'm sorry, Jason, do you trade any of the crypto? Is that in your wheelhouse, or do you follow it?
I follow it. I don't trade it. I kind of, it feels a little bit like Wild West to me. There's so much Ponzi schemes and crappy coins that if I were to trade it, it would only be in Bitcoin and Ethereum. But overall, I feel like I have to get a grasp of the fundamentals and the mechanics of how it's traded.
Sure.
Which, leads me to the question, Mark, why do you think it's correlated if it's supposed to be an inflation hedge? Why is it so correlated to everything else?
It's a great question. And I think the overall narrative, I think when things tend to go down, right, we see this in equities, right, whether it's, single names versus indices and whatnot, that when the market tends to go down, correlations tend to go to 1. That when everyone's panicking, it's a risk asset like any other asset. And I think there's a lot of cross-pollination between some of the active investors in, these tech names, in the ARK funds, the intersection of an ARK investor and a crypto investor. Those are pretty familiar profile, or pretty similar profiles, I should say. So I think that, the composition of players is a lot more intertwined than, people might suspect, and risk off is risk off.
I have 2 questions for you on the crypto, Mark. Someone said to me, I think they run a crypto hedge fund, and I had to think about it for a second. I said, well, how do you hedge crypto? Are you trading one coin against another? Because we don't really have options on this yet to create a hedge necessarily, right? Is that a misnomer, or is there some possibility of a hedge? I guess if there's some correlation in the market, we could kind of argue that.
Yeah. So, I mean, I think actually sort of to Jason's point also there about like understanding what's going on in all these Ponzi schemes. That's what I think is fascinating about that landscape, is it's just a market structure playground. And so there are so many different sort of tools and products that are being kind of invented. A lot of them are garbage. A lot of them aren't going to work, whether it's because of a technical flaw, whether it's because of a bad design. On the one hand, you have the hyper-regulated markets that it takes 10 years to get something through to the SEC. And then only then does it have the chance of, potentially bootstrapping some liquidity together. A hackathon in crypto can produce a new protocol over a weekend. And so there's a lot of experimentation that's happening there. So to answer your derivatives question, I think one of the main ones that's out there is, as a hedge, are what are called these perpetual futures. And so the perpetual futures are a very popular product in the crypto space, where it was actually invented or conceived, I should say, by Robert Shiller of the Case-Shiller Index fame there. And so he conceived this idea of a perpetual future that never actually expires. And the way that the basis is adjusted is through a periodic settlement between buyer and seller. So to the extent that there are more buyers than sellers, the perpetual future will trade slightly above the spot price. To the extent that there are more sellers than buyers, it's going to trade below that. And so that difference between the index price of the spot asset and the perpetual future price is treated as like a funding rate that's exchanged between the buyers and sellers to offset that demand imbalance. That has been an incredibly popular product in the crypto space that a lot of people will use to hedge their sort of token risk. So if you're staking tokens in a protocol, you might hedge that with perpetual futures. So you can sort of isolate the yield component from the directional market risk. On the options front, on the derivatives front, there definitely are DeFi options on a lot of different stuff. All kinds of, there's no OCC behind this, of course.
Does that scare you a little bit? It scares me a little bit.
It scares me a lot.
OCC is the options scoring. So they're the central guarantor of all transactions, right? It's almost as if you're making a trade with OCC. When you make a trade with someone else, they clear it, they settle it, and then they have counterparty risk with the opposite party, right? So
never defaulted. No one's ever bought a call option and not gotten paid, and no one's ever sold a call out. They guarantee delivery on that, and it's really important. I think that's like one of those things that you can see this market structure playground happening, but you don't appreciate how important the plumbing is there.
Yeah, it's important. That's and I like I said before, that frightens me a little bit to get too involved and have too big of inventory. What I know I don't want when we have some sort of derivative one of these days is I don't want delivery of actual coins and have to figure out how to do that. That I don't want. Some people might. I just don't. So,
go
ahead. Sorry, Jason.
I was about to ask when you were talking about a perpetual future. So there's no delivery time, so what's the long case of having a perpetual future rather than having the coin itself?
Leverage is a big component there, right? That with a future, you can get leverage out of that. So that's where some of these crypto exchanges have kind of really pushed a little too far. And we actually, towards the end of last summer, saw some of them pull back. That, you used to be able to get 100x leverage on FTX or Binance or some of these exchanges. I mean, this sounds like one of those, currency trading things that were popular a number of years back, where you could get, 200x leverage on, the Swiss franc or whatever. But leverage is the huge reason. And we've seen the exchanges pull back. But for them, risk management is incredibly important, because to the extent that they have a lot of participants that are highly leveraged, when you see these sort of sharp moves, the liquidations that have to happen can actually exacerbate price action. You have too many people that are long too many of these perpetual futures on Bitcoin, and really speculative, retail, institutional, doesn't really matter. There's a lot of size out there across the board, and you see that kind of leverage build up in the system, and then wham, it just gets flushed out on some of these down moves, and that causes a lot of the really sharp price action. Dislocation across exchanges. There's no Reg NMS that mandates that when you send an order, it's going to go to the best price.
Is there going to be, or is there a cash settled ETF type asset that could be traded? And if so, we certainly could list options on that cash settled entity, right?
I think that's what, I think back to my days, sitting in a market making shop, and when Bitcoin had its first sort of rally, and we went, I can't wait till they list an ETF, so then we can trade options on this. And here we are 4.5 years later, and it's the same story once again. So no, we don't have that ETF. We have an ETF. We have the BITO or BITO. That's, of course, the futures product. But that's got all the questions of contango built into that, and
Sure.
the cost of the maintaining that exposure. But still no physically held coins in an ETF wrapper.
Yeah, I think that would help a lot. I don't know, maybe not. I think that would be a big benefit for the crypto space to have something like that.
Because I agree, and I think ETFs in general are a great vehicle for people to get exposure, right? Like the facility with which it falls into your brokerage account, with which you can buy and sell,
Sure.
Flows through all the plumbing that we're used to. Like those are a great innovation out there. Custody is always a very interesting question with crypto. You have the independents that the extreme libertarians that want to hold their keys in a safe that be your own bank kind of to the extreme. I don't trust myself with that. I don't think a lot of people trust themselves with that. But if something goes wrong at the OCC, you can go back and you can update that ledger and you can say, oh, that was an error. There was a bug.
Right.
Can't go back and do that with the protocol. So that's causing the SEC obviously a lot of concern about this, and I think rightfully so. Right, like that custody issue is going to be a big one to solve before it can really kind of fit into our current market plumbing.
Right.
TradFi market plumbing.
So what's going on today in the crypto space? I haven't even looked. Do you know? I'm trying.
We're bouncing a little bit off the lows of the last 2 days.
Yep.
But generally, a big reset kind of happens. All the liquidation pops out of the system. We've seen a big decline in open interest, actually. One of the big narratives in the space going into this year was the institutions are coming. They spent the last 6 months going through investment committees, and they're going to be allocating billions of dollars are coming in. Right. And I think that didn't materialize, and people are risk off across the board right now. Yeah. So still, I suspect we're going to stay correlated for a little bit longer.
Yeah. Go ahead, Jason. Sorry.
Couple questions, Mark. The first is there an easy place to find stuff like open interest in Bitcoin futures, or in the DeFi space or something like that? Is there an easy place to find that?
The Coinbase purchased an analytics product last year that's called Skew. A term we all know and are well familiar with. So skew.com has pretty good information out there. And then another good resource that's a little bit more DeFi is Dune Analytics. And so they're sort of like it's almost like a SQL-like language that people can create their own dashboards on that. So there's a rich kind of library of user-created dashboards that'll go into all kinds of individual protocols, DeFi as a whole. So those are probably two pretty good resources to start out with.
Cool. Nice. And then I noticed that kind of we saw the tremors of crypto drop. I don't want to say crash, because 50% is not a crash in crypto, but a 50%, we saw the tremors of this coming, and it kind of led equities a little bit. So when the $1 million question is, what are you looking for to see a bottom in crypto?
Well, are they going to be the leading indicator on the other side, perhaps?
Right.
That'll be an interesting question. I think bottoms in most markets, crypto, equities, you name it, I don't think they happen in a V. I think that there tends to be a lot of consolidation for bottoms to really kind of cement themselves. So I'm certainly not looking for this in the next week. I'm not hanging on to any January 28th options that are expiring at their month end, hoping that those are going to cash. So I think we have a medium period of consolidation here. I think the amount of money, though, that is flowing into the space from the venture capital side of things, really suggests to me that there is going to be a lot of medium to longer term catalysts here. So, I look at flow of funds as probably the biggest indicator. And, so long as people are continuing to invest in projects, they're obviously, Andreessen Horowitz isn't raising $4.5 billion to just buy Bitcoin. They're investing in a lot of new protocols and projects that are coming out there. So as those grow, the whole ecosystem as a whole is going to grow. So that's going to take some time for them to produce it. But, I think that time is in the 6 to 12 months horizon.
Okay. All right, guys, that's all good stuff. I got to cut it short here. So our sponsors are telling us we have to get to commercial. So great to see you guys.
I didn't know you were soaking up sponsorship money over there.
God, it's unbelievable, right?
Yeah, I know. I'm glad he's soaking up the sponsorship money.
Hey, listen, you'll get your share worth over $1 million. Good to see you guys. Good conversation. Really interesting stuff. I think that this crypto is going to stay front and center for a while. People are just intrigued by it. It's kind of the new baby on the block. So fun stuff. All right, good.
Like a toddler.
Yeah, exactly. We'll talk next time, and you guys have a great day.
All right. Take it easy, Lex. Bye, Mark.
Thanks, everyone, for coming to Top Trading Thoughts. Don't forget to subscribe, Options Brew TV, and we will see you next time.